Hello everyone, today I'm going to share my views on Grab's IPO and whether to grab it or leave it. First up, I was as excited as most Singaporeans and Malaysians when Grab got listed on Nasdaq, as it is one of the brands that is near to home. Some quick background info: the company went public on 2nd December this year by merging with a special purpose acquisition company, aka SPAC, and the company name is Altimeter Growth Corp. Its debut was off to a very bumpy start, with shares falling by about 21%, closed at $8.75 on the very same day. It then went further down in the next few weeks and even hit a rock bottom of $5.91 at one point in time. Not looking good, huh? Grab's market in the Southeast Asia definitely has growth potential as people are getting affluent, having high spending power, as well as there's an increase in digital growth, etc. However, do note that Grab faces intense competition and challenges in all its products and services. More importantly, at the moment, I don't see very strong moats or competitive advantages displayed by them yet. So let's break them down now into 3 key segments. First up, ride-hailing service. It doesn't seem like they are going to expand to countries outside Southeast Asia region. In an interview with the CEO, Mr. Anthony Tan, earlier this year, he shared that the company will remain focused on Southeast Asian markets even after it goes public in the US. And this spells limited growth, at least for the short term. Furthermore, as a person residing in this region as well as the country where Grab has their headquarters at, I can say that the ride-hailing business has been badly impacted by the pandemic, as most of us are still working from home by default. Though, things may change come next year. But the current problem on the ground is very real, a fact shared with me by some private hire drivers. Next, food delivery service. Sales in this area did rocket last year in 2020 as everyone started working from home. But Singapore, as with other Southeast Asia's countries, are too small. Once again, similar to ride-hailing, there is a limit to how much they can earn and grow in this segment. Then, throw in your Foodpanda, Deliveroo, Gojek, etc., their market shares will be further capped with these competitors around. Personally, I don't think there is brand loyalty when it comes to food deliveries. For instance, I use GrabFood most of the time, but I also use the 2 other brands when there are discounts and vouchers. The last major service by Grab is their financial services, such as GrabPay, Grab Insure, and Grab Finance. They have to compete against the banks and traditional financial institutions, which is going to be very tough. For payment services, you have the tech giants like Apple for their Apple Pay, Google for the Google Pay, etc. Once again, you throw in FavePay, Singtel Dash, Alipay, WeChat Pay, etc. Without proven track record, how much pie and market share can they capture? That's the key question. Okay, to sum it up, the company's financial situation isn't fantastic. Their revenue did grow year over year, but they are not profitable yet. The intense competition in the various segments, coupled with the small market and pandemic, will definitely hurt their bottom line. Alright, so my thoughts are, things may change in 3 to 5 years' time, such as further expansion by the company, COVID has gone, etc. Therefore, it is important to watch out for their future plans. I feel if they really want to become a super app, they probably have to emulate or be able to match WeChat's standard, which I feel that is a real super app in China. In the short term, I don't think I would invest my money in them. The dollars can be better invested in other stocks with higher growth. At the end of the day, if you wish to invest in this stock out of support or some other reasons, maybe, just maybe, enter only when the coast is clear. It is noteworthy to highlight that they are looking at acquiring a Malaysian supermarket chain, Jaya Grocer. However, do also note that the acquirer Grab is also using assets to satisfy the transaction, which will negatively impact the balance sheet in the short term. So let's see if there are more exciting news and plans coming up. And I don't think it will be too late to hop on when things start to look slightly more promising. What do you think? Would you be investing in them to show support, or do you have high conviction in the company? Let me know in the comments below. Thanks for watching my video. I will progressively cover other stocks and topics when I can. Hope you can subscribe to my channel to show some support. Thank you!